Welcome to a new update in which we're going to discuss Bitcoin, which is facing some big numbers during the week as GDP is coming in and PMI today. But we're going to look at the markets in which we are looking at some levels, which we have been doing yesterday as well. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter, which is providing 3 free trade letters per week on macroeconomics, on the charts of Bitcoin and Ethereum, and it's also on altcoin setups, which we do on Friday. And then finally, we've launched a new partnership yesterday with BitGet, as we're going to do our copy trading within the premium platform alongside a BitGet copy trading feature. In order to promote it even more and to be able to assist you even more, you can get a $2,000 sign up share if you sign up this week through our affiliate, 8,000 deposit bonus up to it, a 15% discount on the first month on the trading fees, and if you are depositing $300, the first 300 depositors get $10 for free. All the information can be found in the description beneath. Make sure to use that as well. If you want to copy trade my portfolio and some of the traders ones, you have to sign up to our premium platform, which you also can find beneath. Now, when we're looking at the markets are stabilizing a little bit. The S&P has been showing a lot of strength, and Bitcoin isn't really cracking highs yet. And altcoins are also on the edge of having some sort of consolidation taking place, which is not bad. We have just been seeing a 50% run on crypto and Bitcoin, and through that, there are some levels we should be eyeing when we get towards the market. So in this case, if we're looking at the total market cap, for instance, we can see that the markets have been running up quite fastly here. We have been getting towards the resistance zone, which is around 1.02 trillion. The question is, are we going to crack this in one go, or are we stabilizing for a little bit, in which the area around 925 billion and the area which we have here around 840 billion are the zones that you should be eyeing or keeping an eye on if you want to buy the dip on the markets, and those can grant you massive opportunities, as you might know. In that way, when we're looking at those cases, this is the daily time frame at this point. When we're looking at the altcoin market cap at this stage, we can clearly conclude the same, in which we have some levels to watch on the downside, which is 500 billion, which is 460 billion, and the area we have around 525, in which we are currently facing a crucial resistance, which is essentially the final hurdle for the altcoins, because if we break out of this high, then we are going to take out even more highs here and start accelerating towards 950 billion, which approximately gives you a 2x on the markets of the altcoins, which approximately gives you between 3 to 5x on altcoins overall. We'll discuss the topic in a little bit on this YouTube channel as well. Looking at the DXY, we are seeing that it might be bottoming out on this support level. The economic data will kick in, and we also know the Fed doesn't have a real argument to start or stop the actual hikes. It can continue. It says that it will continue. The unemployment is still relatively low, so potentially we're going to get a hike again, and the markets are already overpricing the fact that they will be reversing that policy quite soon, through which if they don't, and the argument is that they won't, we can see a bounce taking place on the DXY here, in which we can have a bounce towards 105 points. Looking at Bitcoin at this stage, essentially still in the same resistance zone, still are facing 24k for a crucial one, might potentially make a bearish divergence here, which is invalid as long as we stay above 21k. When we're looking at the price action of Bitcoin in itself, we can definitely conclude that we had a crucial resistance to break. What I mean by that is that we were running all the way towards 23.2, fell down towards 22.6, reject here, make a new low to get close towards the CME futures, but it didn't close as it dropped below those levels before the open already, ran back towards 23.2, rejection, and now making lower highs, through which the assumption can be made that we're going to have retests here. So this pivotal level here at 3.1 is important to keep an eye on. If we crack it, you can assume that we take a new high here, continue this trend, and then we start looking at 23.7 for a potential rejection and bearish divergence. If we drop beneath and take out these lows, you can clearly look at 22.1 to 22.2 and potentially even a faster drop towards 21.5, which ultimately grants you massive opportunities on the altcoins. So this is an important and pivotal area to watch. Taking out these lows will grant a potentially fast drop on the markets, and that's why you should remain relatively cautious on the markets at this point. Looking at Ether, we see the exact same picture. Bounce from the area at 1600, rejection at 1660, and which we were just going downwards even more. Couldn't break the pivotal resistance area yet. So if we break 1645, that will grant continuation, and then we can start looking at 17.5 to 1800. If we take out this low here at 1611, I think we can look at a potential drop towards the area of 1525 to 1550, which is a good area for long entries. Again, a very short update today. Tomorrow I'll be making a longer one. Make sure to hit the like button, subscribe beneath, get that BitGet affiliate link and join it there. Make sure to join our premium platform. Ciao.